Hello, welcome to the European Open briefing for Monday, May the 15th. I'm Rafi Barajan, currency analyst at XM.com, and we're going to be having a look at what's happening in the currency markets today. So we had a bit of a mixed start to the day in terms of risk appetite. Initially, we saw quite a bit of risk off following that announcement by North Korea that they've conducted a new missile test. We also had some mixed data out of China initially, which was later offset by some other news from China. And we also had weak data on Friday as well out of the US. But then we saw quite a dramatic rebound in risk sentiment following a rebound in commodity prices led by oil prices, which have surged by 2% this morning, and an announcement by China that they want to help Chinese companies to expand abroad, which could potentially lead to a big increase in infrastructure spending. So let's start with the dollar-yen pair, because although the dollar-yen has been declining in the past few days, and it started weaker at the Asian Open, it has since rebounded to above 113.50 yen. We had disappointing data out of the US on Friday. Retail sales rose by less than expected in April, and US inflation eased from 2.4% in March to 2.2% in April. That was below forecast of 2.3%, and all of this led to lowering of expectations of Fed increases this year. We saw Fed fund futures, the odds of a third rate hike fall to below 50%. So that suggests that markets are now are only fully pricing in just one additional increase in Fed's rates this year, and this led to also to U.S. Treasury yields, 10-year yields, to drop from 2.4% on Friday to around 2.33% later on Friday and this morning. The dollar index is down against major currencies such as the pound, the euro, and the Australian dollar as well, but the overall improvement in risk sentiment has helped the dollar rise against the yen. Moving on to gold now, and gold, although we are seeing improved risk appetite, gold is still up on the day, mainly due to the weaker dollar, but also on those concerns about North Korea after they conducted another missile test on Sunday. It is reported that North Korea wants to develop an intercontinental ballistic missile that would be capable of carrying a nuclear missile. So all of that has raised tensions again in the region. We also had the ransomware cyber attack over the weekend, although those concerns have eased now since they only seem to be infecting all the computers, and we're seeing a big drop back in the Japanese yen due to that improvement in risk appetite, although as mentioned, we can see gold is still faring quite well. Moving on to the Aussie and the Kiwi, both currencies have been boosted by rebound in commodity prices such as iron ore. Both currencies have been struggling recently due to the weak commodity prices and also central bank policy. We had the announcement out of China. They said that they announced the One Belt, One Road project, which is aimed at helping Chinese companies to improve investment ties in Asia, Europe, and Africa, to boost ties and to boost Chinese influence. And this has the potential to lead to big infrastructure spending projects. So all of that has added to the improved risk sentiment. We're seeing the Aussie climb to a one-week high. And in New Zealand, we had stronger than expected retail sales data that further boosted the New Zealand dollar. We can see the Aussie is currently trading around 0.7420 and the Kiwi around 0.6885. Let's have a quick look at European currencies now, because although both currencies had a poor week last week, they both had a strong start on Monday for the current week. The euro did see a rebound on Friday, and it's currently up around 1.0938. And with, of course, in France, Emmanuel Macron, the new president elect, has now been sworn in. So much of the focus now will be on what reforms he will carry out in France. He's later due to meet German Chancellor Angela Merkel in a bid to discuss European integration and European reforms. The pound is also up, and we've got quite a bit of UK data out this week. We're going to have inflation out on Tuesday, unemployment data on Wednesday, and retail sales on Thursday. So it's got to be, so all of that could have a potential impact on sterling, and we're seeing sterling currently trading at about 1.2920. The biggest gainer, though, out of commodities this morning is oil. We had, although there had been some signs over the past week that Saudi Arabia at least wanted to extend the output deal for more than 6 months. We had confirmation of that. But the energy ministers of both Saudi Arabia and Russia, they said that they want to extend the current output deal by 9 months till the end of March. It's due to expire, of course, at the end of June. OPEC is due to meet on May the 25th, so we could see signing of that deal by then. So for now, though, oil is definitely being boosted by that announcement. They're up 2%. US crude and Brent crude are both up around 2%. We can see US crude currently trading just below the $50 a barrel level, and it's also boosting the Canadian dollar. Which of course has been struggling recently due to deteriorating trading relationships with the US and a major downgrade of its bank's credit rating. But now we're seeing the loonie firm to the highest since the end of April on the back of those gains in oil prices. And before we go, let's have a look at today's economic calendar. We can see the retail sales data out of New Zealand there. We had corporate goods prices out of Japan, which rose by more than expected. And the Chinese data, we can see urban investment in China. It fell short of estimates of 9.1% to rise by 8.9% in the year to date in April. Industrial output was up 6.5%. That's below expectations of 7.1%. Retail sales was the only positive data. They rose by 10.7%, beating expectations of 10.6%, although that's still down on the prior months. But for the rest of the day, it's going to be very quiet. We don't have any major data due. So that's it from me. Thank you very much for watching, and have a great day.